Hello, everyone, and it is inflation day. The big expectations are there for the US inflation data to be released later today in New York time, of course. We will have Fed speak after that event, and also we will take a quick look at what it could mean for the equity market. Certainly, already in Asia today, we've had China inflation come out for July, and that continues to push higher. It's not at all of the levels that are alarming, the alarming levels of the US and elsewhere in the Western world, but still, it just goes to show that inflation is a global force at the moment and will continue to permeate absolutely any economy at all. The worrying part of this was food inflation, and we know that food supply disruption and food inflation has been a major feature of 2022 to date. It's likely to remain the same, some moderation in prices, but still very high prices for food all around the world, and particularly for the poorer countries which fight to get supply, really. But in China, we've seen food inflation really leap higher to 6.3%. Now, there can be individual factors at play in China, of course, but I do think it is exhibiting how China is going to be following the rest of the world into a high inflationary period. As I said, the big number tonight, US inflation. The last number was 9.1%, really surprised people. I really want to bring your attention back here to the 5.4, 5.3, 5.4 period. All of the people who are telling you that inflation is peaking now were saying exactly the same thing. In fact, I remember seeing the media headlines in the media press, financial media press, saying inflation has peaked, as in it was already known to have peaked. But of course, that was nothing of the sort. That was shortly after people had said that inflation would only be transitory, but then they said it peaked. And of course, we've just continued to march higher very steadily with the occasional hiccup. So it's possible we will get a little bit of a pullback from this 9.1. We've seen petrol prices, gas prices at the bowser in the US come off. We've seen some moderation in food prices, and also in the US, there has been a slight alleviation of the supply chain disruption problems across the agricultural industry. So there's a lot of information, anecdotal information there to suggest that the inflation number should actually tire here, at least on a medium-term basis. I'm not suggesting the end of inflation has been seen. In fact, by the end of the year, we could easily be above 10%. But there's a lot of argument here to suggest that inflation might just pause or pull back a little bit. Now, that's the, if you like, positive side of the equation or point of view. The more perhaps scary point of view is that this inflation number, if it again moves higher, and it does have a tendency to surprise to the upside, and it's difficult to assess whether those slowdowns in some of those prices have really flowed through in time to be in the official data. So we could see a move up to 9.3, 9.6%. If that were the case, the Fed is likely to suggest it needs to keep tightening rates aggressively, which means it will put a floor under 75-point rate hikes from the Federal Reserve. And we would even, and certainly the market loves the story, the market would start talking about pricing in a 100-point rate rise at the next Federal Reserve meeting. However, I personally think that's unlikely, as it is very clear, particularly from the jobs data we saw, the labor cost data we saw in the US yesterday, where labor costs were up 10.8% for the second quarter, and that was about 23% higher for the first half of the year, which is just terrible. So that's labor costs. For the second quarter, wages were up 5.7%. And the really flip side of all of that was that productivity actually fell 4.6% in the second quarter. So you've got out of control labor costs, wage rises, and falling productivity. It's not a pretty picture for the US economy at the moment. The Federal Reserve will be aware of that, and it has said previously that it is willing to see the economy experience some pain in its fight against inflation, that inflation is its number one target and preoccupation, and they do tend to be the kind of animal that can become quite blinkered and single priority focused. During the COVID years and really until around the start of this year, they were all about being seen as the most caring central bank in the world, and now they want to be seen as the most inflation-fighting central bank in the world. So I think we're definitely going to get 75-point rate hikes going forward at the next 1, 2, or even 3 meetings. I do think the market will talk about the risk of a 100-point rate hike if this inflation number is higher tonight, but if not, then the market will realize that it's probably 75 points or 50-point hikes going forward. That could see the equity market have a bit of a rally. Now, the equity market has had this tremendous, it's almost a mini bull market. It's been so strong. It's a little bit more powerful than this rally here or any of these rallies on the way down. So that does give bears as myself some pause and consideration of what if this is a major change in trend. If inflation falls back tonight, I think we would only get a momentary move to the upside in the US 500, this US 500 index, because it really looks tired here after the recent rally. It's really struggling to maintain the levels that were achieved. And it's sort of a market in waiting, really holding on, waiting for the inflation data to give it a spike to the upside to take profits. So that's what I think would happen, and then the market would fall back. It's going to be very tricky on the day, of course. The inflation number will tell the immediate story. You'll see a fair bit of volatility, I would think, in both directions on that. Because you'll have some people saying, oh, well, that's probably the peak after the event. But then we'll have the later volatility in the market that will be caused by a couple of Fed members having already prearranged press conferences or speeches. So watch out for a very volatile market in the New York session. I remain a resolute bear overall of the US stock market. Its economy really looks a little bit Armageddonish because it already is in a prices wages spiral to the upside, and the Federal Reserve is aggressively hiking rates to try and stop that. So this is an economy with all sorts of problems, and productivity is in sharp decline. It's not a market in which one would normally think it's a good idea to be investing in the stocks of that economy. So I suggest significant caution on the night, and we'll see how that inflation number comes out. Thank you very much. Clifford Bennett, Chief Economist, ACY Securities.